Good morning, everybody. Hey, welcome to Tuesday, December 27th. Couple days left of this year, and we'll talk about what the markets and the futures are doing here in just a moment when Dave joins us. Before we do that, though, let's not forget that as we're coming to this end of this year and you're planning for next year, are you going to retire in the next couple of years? If you are, it's very important that you have a plan in place. And that's why we developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement design. Hey, with that, we got Dave coming up next.
5.7 Highlands Light FM, that's Chicago there. Well, we went through Christmas weekend. We went after the day after Christmas when everything was closed, and now we're getting ready to throw some money around Wall Street. A bunch of stuff happened after everybody headed for the doors on Friday, and Phillip Statler is here to tell us about some of it from Statler Financial Services. Phillip, good morning. I hope you had a good Christmas.
Hey, good morning. I did, Dave. It was great to be around family and having everybody here and home, at least for a part of the Christmas season, which is always good. And we'll talk about today how hard it is for people to actually be able to get home, including some of my family. So we'll talk about that and more here in just a few moments, all the stuff that's going on.
Absolutely. Let's set the table first of all. I got to go way back to Friday in order to tell you where the markets are opening up this morning, because it's been that long since the markets have been open. We had a decent day on Friday. It was 176.5 points up on the Dow. The Standard & Poor's was up by 22, and the NASDAQ was up by 21 3/4, which gives you the maybe, just maybe, a little Santa Claus rally might be happening, but doesn't appear like it's going to this morning. You mentioned Southwest Airlines, and some of your kinfolk evidently getting hit by it. Boy, did they have a rotten weekend. It seems like every possible thing the weather could do to an airline, it did to Southwest. Everybody else managed to recover, and they're still canceling flights, aren't they?
They really are. United, American, Delta, even JetBlue yesterday, I think they had everywhere from, I think Delta or United was the worst at 9% of their yesterday flights got canceled, compared to Southwest canceled 70% of their flights yesterday. I don't know what it is today, but I can tell you that my daughter's family was going to fly back tomorrow. They've already canceled their flight. And scurrying around and trying to figure out how to get back home is really and truly making the Christmas season not so happy or merry.
Oh, yeah. And for public consumption, Southwest has been saying they've got crews stranded in the worst places, and that's their problem, getting crews to planes. I mean, that sounds plausible, but their hubs aren't that much different from the other ones, except for a little bit more activity up in upstate New York, where they really got creamed. But it just, they're just, if it can go wrong for Southwest, it went wrong this weekend, one way or the other, didn't it?
It did, Dave. I mean, they're trading down this morning 4.1%, but let's just talk about what the president of the company actually came out and said in a news report, is that they need to upgrade their systems. And they've known that. So why haven't they done it? And I think that is why we're seeing the Department of Transportation coming into play. Even the White House is getting involved and really criticizing Southwest and their inability to get through this process like the other airlines.
They didn't do it right one way or the other, whether it was crew placements or whether their electronics and their communication systems need to be increased. I mean, a whole lot of people fly Southwest because they're a fun airline to fly and their prices are good. So it's one of my first choices, and I got to admit, I'd be thinking twice about them now the next time I head out of town.
Oh, yeah, especially in wintertime, right?
Yeah, that too, definitely. It was a crummy year overall for the exchanges in general. We were off. I found an interesting report. I didn't tell you about this before we went on the air, but I got a report here. The hedge funds are finally justifying their existence. While the S&P was down 14% so far this year, a whole bunch of the hedge funds that we talk about, where the big money guys put their money, we're gaining money considerably this year. Evidently, if you got the research and you got the contacts and you're capable of throwing lots of money around at once, there is a way to make money on Wall Street this year.
Well, yeah, I mean, that's, hedge funds, but they can also do the exact opposite, right? I mean, we've got some hedge funds that have not done well this year because they made some plays that just didn't work out. And that's what hedge funds do. You know, they if they find a play, it can be really good or it can be really bad. And so that's the deal. And that's why to deal with those guys, you got to be what they call a credit investor, meaning you got to have a net worth of a couple $1 million. You got to have $500,000 of income. There's a lot of things you got to have to be able to play in that ball field, because you got to be able to lose a lot of money in some cases in order to get those years where you make some good money like this.
Absolutely. I know they tend to be contrarian at heart in terms of that. Like in 21, hedge funds were delivering an annual return of about 10%, which wasn't bad given the but then you compare it to the fact that the indexes were up close to 30%. Well, if you were a hedge fund manager last year, you were kind of banging your head against the wall, but this year a few of them really did well. So it's just, there has been ways to make money in the market this year. Just
absolutely
hasn't hit for the Joe Q public on the street as easily, has it?
No, it has not. It has not. It definitely takes research in order to make some of those moves to be profitable in a down market. But let's talk about the market sliding. Let's talk about probably one of the biggest sliders we've seen, and a popular name at that, Tesla.
Yep.
Tesla down 65% for the year. I was looking today, their 52-week range, they've been as high as $402 a share, Dave. They closed on Friday at $123. And if they opened right this second, they'd open at $116. That's a new 52-week low.
Yeah, that is flipping amazing. Some of it is Musk getting a lot of political plastering for his takeover of Twitter. Some of it, I know that Tesla's had some recalls this year that's given them some problems as well.
That's right. And one of the big things they talk about this decline right now is because, China is opening back up. But one of the things Tesla said is that their China facility won't be at full capacity in January, and I think that was a big disappointment to a lot of shareholders.
Yep. Add to that report that I think I mentioned when you and I were on together last week, the projection for the sales percentage and market share of electric cars for next year has been revised downward precipitously. So the outlook for what Tesla does for a living isn't as hot as it was a year ago either.
That's right. So they've got a lot of headwinds against them, and they're getting close to that $100 a share number, and that's a substantial decline for them.
Yeah, poor Elon. He's not going to be able to go out and buy another company anytime soon, is he?
Yeah, it'll be tough, I tell you.
Life's tough when you're not the richest man in the world anymore.
Hey, Dave, the other thing I want to mention real quick because we talked last week, I think, about the whole deal about the 1099K. And it used to be if it was over $600, that's you didn't get one until it was over 20,000, and they reverted that down to 600. Well, IRS came out sometime over the weekend, and they delayed that rule, and so they're going back to that $20,000 number and more than 200 transactions. So we don't have that to worry about in 2022's taxes, but folks, I'm telling you, it will be here in 2023. So if if you're in that world of eBay, PayPal, Venmo, and getting funds back and forth, you need to find a way to make them personal if they're personal, business if they're business, because that's going to show up on a 1099K.
Absolutely. It's nice to have the year to figure it out anyway. It must have something to do with the 60-odd thousand new IRS agents they're hiring. They got to train them how to do that, right?
I guess. I'm not sure.
Talking about government spending money, you had a list of some things that were buried in that reconciliation bill that they pushed through on Friday that supposedly was just to keep the government open through the fall of this year. Yesterday morning while I was soloing, I mentioned that it included some revisions in the retirement funding mechanism, like required minimum distribution ages from 401ks and IRAs. That actually is something that you and I pretty much agreed is desirable. Didn't sound much like an omnibus to prevent the government from going out of business bill, but at the very least got buried there. But there were billions of dollars that you kind of wonder how they got trimmed onto that Christmas tree, didn't you?
Yeah, you do. I'm looking at the Heritage Foundation, and they try to get through that bill. You've got 1.2 million for an LGBT Pride Center somewhere. You got 1.2 million for services for DACA recipients in for San Diego Community College. Another almost $500,000 to Equity Institute of Rhode Island to indoctrinate teachers with anti-racism virtual labs. You've got $1 million for Zora's House in Ohio. 3 million for the American LGBTQ plus museum in New York City. And the list goes on. Oh, I like this one. 3.6 million for the Michelle Obama Trail in Georgia. And the list just goes on of stuff that's in that bill that are really and truly just a lot of fluff that didn't need to be there. It's not things we need to be spending money on given the situation we're in right now. Matter of fact, the other article I was reading, Dave, was some facts.
I can't help but wonder whether they might have slipped some in maybe to help rebuild Fort Myers. What do you think?
I don't see that anywhere in this list that the Heritage Foundation found. That'd be nice if they
Funny
did.
How that works that way, isn't it? Yeah.
Those people are really going to need some help. But some of the 15 facts I saw that came out for massive economic meltdown, they say, quote, in 2023. So, but they do have some prudent information here that does make some sense. Existing home sales have fallen for 10 consecutive months. Home sales are down 35% over the last 12 months. That's the largest year-over-year decline we've seen since 2008. Home builder sentiments dropped 12 consecutive months. Construction, I didn't know this. This is construction costs have risen more than 30% since the beginning of this year.
Wow.
Yeah, that I didn't realize that because I knew lumber prices
we knew they were up, but I was figuring 8-10% or so, kind of tracking the regular inflation rate. 30% just makes them drop my false teeth.
Yeah, I mean, so I thought that was a big deal. Even so, this one caught my attention. Supposedly, Goldman Sachs will lay off approximately 4,000 employees soon. That's a big number. Yeah.
And you can bet a nickel it's not going to be in the executive suite.
Well, yeah, it'll be middle management or the lower end of the spectrum for sure.
On balance, yeah. So happy New Year to you too. It's going to be a relatively quiet week this week as far as economic reports because the first doesn't come until over this weekend. But we do have some things that could be market movers and might help if we get some good news out of them. What do we got coming up this week?
So this week we have not much. You're right. I mean, later this morning, we have the S&P Case-Shiller Home Price Index. We have the FHFA U.S. Home Price Index. So two price indexes coming in there. We've got a pending home sales index comes out on Wednesday morning at 10. Thursday, obviously, jobless claims. Friday, not much of anything. It's a Chicago PMI comes out. So really, that's it for the rest of this week before we really start to migrate into the new year.
And then in 2023, the first week in January should be a busy one once we get going on Tuesday morning. Resetting the table, I keep wanting to say yesterday. Friday was a modest up day on Wall Street. Dow was up a full 0.5%, and that's hard to complain about. 45 minutes before we open this morning, what direction are we going so far? I think I'm seeing a turn on my delayed quotes.
You are. We're seeing a turn down because we did have the Dow was up over 160 points. Now it's up 66. It's about 0.2%. S&P 500 is trailing down. It's up less than 0.1%. And the NASDAQ 100 has actually gone negative, down 0.25% right now. Small cap Russell 2000 is down 0.4%. So everything seems to be heading in the wrong direction for the open this morning. On the other side of the coin, we got silver making a big pop this morning, up 1.1%. Back over $24 to $24.19 an ounce. Gold up almost, or well, a little over 0.6%, back over $1,815 an ounce. And crude oil, they've gone the wrong way. A lot of blaming on China opening back up 0.7% to $80.10 a barrel right now.
No, not exactly what I wanted to hear on that front. Overseas markets, the Asian rim, mostly up. We had a little bit of a downtick in Hong Kong. The European markets are just frittering around a little bit above the zero mark. They're in green ink midway through their day, but nothing really exciting. Keeping track of what you got coming in for the retirement, and there have been some changes over the last 72 hours as well. Might be a good idea to get with a pro and get your plan in place. Phillip, how do I find you to get that plan?
Darren, give us a call, 863-382-0037, to schedule their core retirement design that starts with an analysis of their current portfolio. From there, we'll put together a plan that lets them know that they can put together the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here every day during the week on Light FM about this time. Phillip, have a good day. We'll catch you then, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you had a Merry Christmas. Happy New Year coming up. We'll talk to you again tomorrow. Until then, take care.